Happy Friday, gang. We've got another important episode of Money Talks for you today. It was an incredible Web3 filled week at the Permissionless conference in Palm Beach. It's a mouthful. We may be in a recession, but the space is clearly in build mode. I've got Mark Yusko, CEO and Chief Investment Officer of Morgan Creek Capital Management, who will join me in just a bit to discuss investing through a recession and hard times, and give us his perspective on where we're at here from a macro perspective. And as always, Abra Bitcoin Analyst Natalie Brunell will check in with the latest on Bitcoin. And don't miss the AAA Ask Abra Anything at the end of the show. All right, let's do this. Hey, gang. Welcome to Money Talks. I'm your host, Bill Barhydt. So just to kind of cut to the chase, I think we're actually in a recession already or extremely close. I'm just looking at some of my key indicators here, and they're not pretty. The equity markets are starting to clearly price this in. Debt markets seem to be bottoming, at least short term, which may mean that rates will likely start falling as the broader bond market prices in the fact that we're in a recession or close to one. We've got Mark Yusko joining us in a few minutes, and we're going to dig into this. I don't have a crystal ball, as you all know. I don't think this is going to be a deep recession. It looks like the Fed raised rates so quickly that inadvertently they may have gave themselves some wiggle room here. But as I said earlier and on last week's show, I think the bond markets and the oil markets honestly did the Fed's job for them because they were asleep at the wheel. Anyway, we may see a couple more rate rises so that they can give markets the feeling that they're anti-inflation. More important than those rates will be the Fed's commentary. Do they signal that the economy is slowing? Do they signal that they will likely hold off on future rate rises? I believe that that's probably what's going to happen in June. At some point in June, we're going to get an indication that they may have to pause because we've seen a dramatic slowdown. Look, if you run a small business or a lower margin business, it may be time to batten down the hatches for a few months. Make sure you have a reasonable amount of cash flow and that your revenue is higher than your expenses. If it isn't, you may have a problem, at least in the short term. You know, I also was reading a pretty decent article that Forbes wrote during the beginning of the pandemic last year when it looked like we were going into recession, and basically looking at previous recessions over the last few cycles going back to 1990. And for many of you, and if you're if you're under the age of 34, you've probably never experienced a real recession, except the brief one we had at the beginning of COVID. And that was a little bit different because it was short. It was, real quick. And of course, we know what the Fed did after that and what that did to the economy. But, what we can learn from past recessions, and I'll publish the link to this article in the live stream, or I'll have the team do it in a moment. But the stocks, they may rise entering into a recession, but they almost always decline during a recession. Stocks tend to rise before the recession ends, right? So usually that's at peak fear, which is really interesting because we're at pretty deep fear right now. The degree to which stocks fall during a recession is affected by how long it lasts, its severity, and the valuation of stocks when it began. And some of the best days in the stock market occur during a bear market. Now, by far, the worst that anybody who might be alive today experienced was during the Great Depression, when after peaking, stocks fell like 50% or just under 50% in a couple of months. And then, of course, the total loss going out to early 1930s was almost 90%, and it took like 25 years to recover. Nothing like that has happened since. I don't think that's going to happen or anything close to it this time. I think stocks are traditionally undervalued today versus where they've been similarly valued during past downturns. So that's encouraging. And I think, as I said, real inflation is much, much higher than the current interest rates would have us believe, which means that relative to the opportunities, the cost of capital is still relatively low. So we'll get into this all with Mark in a few minutes. I want to get right to Bitcoin, and we'll bring up Natalie, and then we'll bring up Mark. But Natalie is going to give us a deep dive into what's happening with Bitcoin right now. And there's a whole bunch of really interesting stories making headlines. She's going to give us, obviously, some more info on the Luna fallout, which everyone wants to talk about still. The Fed's talk of the week, which I just mentioned, the broader equity market sell-off. Really interesting happenings in El Salvador this week. They had 40, I think it was 45 countries get together, and it was mostly to discuss Bitcoin and crypto and their project there and how it might help other countries, and is there a playbook for repeating this. So we'll get into all of that with Natalie. I'll give you some thoughts on the permissionless conference I just finished in Palm Beach, Florida. 5,000 people. Congrats to Jason and the team at Blockworks for an amazing event, and the team at Bankless, of course, as well. We'll get into that. Okay. So, but first, no one likes leaving money on the table, but if you're hodling your crypto in a cold wallet, that's exactly what you're doing. Keep your funds in an Abra Earn account, and you can earn interest without lifting a finger. Here's how. All right, welcome back. Abra Bitcoin Analyst Natalie Brunell is here with the biggest headlines of the week and insight into what's going on with Bitcoin. Natalie, how you doing?
Hi, Bill. Happy Friday, everyone. Lots of news this week to go over. Bitcoin is still chopping along around the $29,000, $30,000 mark, but I have to say it has been holding up pretty well in this range despite calls for it to go much lower. It feels like everybody is bearish right now as the Fed tries to navigate this quote softish landing, which is feeling pretty turbulent. And I know we've talked about it on the show before, but I think it's really worth mentioning that when you zoom out, Bitcoin is still up more than 300% since March 2020, and it is not down as far in this correction as some traditional stocks and investments. People who chose to save in Bitcoin over the last 2 years, they now have about 3 times as much as those who just held the S&P 500. In the Fed talk this week, we heard that Jay Powell is determined to keep tightening, and he seems to be fine with letting the equities fall, letting crypto fall in order to fight inflation. The problem is equities falling doesn't miraculously fix global supply chains, which are crunched, and they are also driving costs higher. Remember that in the past, he said a 75 basis point hike is off the table, but another 50 basis point hike is really just around the corner in June. And there are a lot of Bitcoiners out there who predict that the Fed will keep withdrawing liquidity until something in the system breaks and sparks a real liquidity crisis. At which point, I think we can all agree it's likely they will print because that's what they've done in response to every other crisis. So I personally don't see a bottom happening yet. I don't think the bottom is in. I am expecting more volatility across the board. And I'm also watching the bond market closely here to see if there's any shift there that prompts a reversal, which I actually think will happen before the Fed moves, just like it did before the official tightening. That said, let's look at some other Bitcoin headlines. A lot of people are still talking about the Luna Terra meltdown, and the CEO Do Kwon is feverishly tweeting, trying to rebuild the ecosystem, but most people have completely lost faith. The Luna Foundation Guard once had more than 80,000 Bitcoin in its reserves, and they are now down to just over 300. Wow. They tried to deploy all those Bitcoins to defend the network and reestablish the peg, but it still couldn't save Luna from going totally bust. There are so many questions surrounding this whole situation. I think it will end up in civil court, but I've also read reports that Luna is trying to use what's left of its Bitcoin reserves to pay back some of the stablecoin holders who have lost their life savings. And this is just going to be such an uphill battle when it comes to reputation and building back public trust. And we'll definitely keep following this story as it relates to both Bitcoin and any moves by policymakers to regulate the space using this as an example. Moving now to a more exciting headline out of El Salvador, 32 central bankers and 12 financial authorities from 44 small countries met this week in El Salvador to talk about financial inclusion, banking the unbanked, the digital economy, and of course, El Salvador's adoption of Bitcoin. Now, to be clear, this meeting was actually scheduled 2 years ago before El Salvador legalized Bitcoin. But what an amazing opportunity for the president to share with central bankers why his nation moved in this direction and, what's happening, even though there's this massive correction. You might have seen some tweets from Bitcoiners in El Salvador actually helping authorities and central bankers who visited download Bitcoin wallets and really learn about the technology for the first time and in real time. So I think this is super bullish for Bitcoin. It took 12 years for the first country to adopt BTC, only 8 months for the second, and the third, especially after this meeting, could be around the corner. In other news, we also got some updates on just how much mining is still operating in China. Despite the ban that happened last year, which saw Bitcoin's hash rate quickly plummet along with its price, China is now back to being in the number 2 position globally when it comes to hash rate, which is Bitcoin's computing power. According to new data from the Cambridge Center for Alternative Finance, the US is in the top position with 37.84%. China surged back to second with 22%. Kazakhstan takes third with 13%, and then Canada and Russia round out the top 5 countries with 6.5% and 4.5% respectively. Now, this just goes to show that even when a powerful country tries to ban Bitcoin, they really can't stop it. And some of the operations in China, they may have gone underground reportedly, but as you can see, they've reemerged in a very significant way. The other interesting thing about the data from Cambridge is the states dominating mining in the US. This came as a shock to me. I thought it would have been Texas that leads the hash rate. We hear so much about Texas in the news, but actually by a long shot, it was the state of Georgia. Georgia contributes more than 30% of our country's hash rate, with Texas at number 2 with 11% and Kentucky at number 3 with 10%. California was also much higher than I expected since electricity can be so expensive here, whereas Georgia actually makes a lot of sense when you dig into it because of the amount of natural gas the state has at its disposal. The last thing I want to say is this data really shows just how much the US benefited from the China mining ban. So much of that power, so much of that migrated here, which is not just driving capital investment into the space, but also forcing policymakers to get educated on the technology and how it can serve and benefit their energy infrastructures. All right, those are the stories I've been following. I know these are choppy waters that make it hard to have diamond hands, but remember again to zoom out. And even if there is more short-term selling, which I do expect, you know where I think this is all headed. Bitcoin is not dead at 30K, and it will still be early when it's back at 60K. Bill, back to you.
All right, thanks, Natalie. Sobering, and thanks for the updates. Super interesting. We're going to have to really watch what comes out of these El Salvador meetings. Mark Yusko is going to join me in a moment. Mark's the CEO and Chief Investment Officer of Morgan Creek Capital, and I'm really excited to finally have Mark on the show. But first, Abra, as you know, is your one-stop shop for everything crypto, and here's how easy it is to make a trade on the Abra app. Let's see it.
Trading on Abra is easy. Just click the exchange button. Tap the source you'd like to trade. Tap on what you'd like to trade it for. Type in the amount. Then click trade. Tap, type, trade. Totally easy on Abra.
All right. Welcome back. Please welcome to Money Talks. It's a long time coming. Mark Yusko. Mark is the founder, CIO, and managing director of Morgan Creek Capital Management. He's an investor, hedge fund manager who got his start managing endowments for Notre Dame and the University of North Carolina at Chapel Hill before starting Morgan Creek. Mark, welcome. Thanks for coming on. Great to have you.
No, Bill, thanks for having me. Really excited to finally make this happen. It has been too long, and excited to be with you here this afternoon.
So I want to get into the kind of sobering part of what's going on for a second, but I think it really is important to kind of set some context for your background and what you've done. You're the only person I know who's run a big endowment or multiple endowments, who now runs and manages a large crypto fund. How did you make this transition, and why do you think you got it so early?
Well, I appreciate that, Bill, and I wish I had gotten it earlier, in the sense that I would say I was I was presented on a silver platter, the Bitcoin ecosystem, the same month as the Winklevoss twins. They're multi-billionaires and I'm not, partly because they saw it faster. And I was coming out of that institutional world and I didn't really get it. I mean, I have a good friend, you know, Dan Moorhead, and Dan called me to come out to San Francisco. We had dinner. He said, hey, I'm shutting down my hedge fund. I'm going to spend the rest of my career focused on Bitcoin and blockchain. And hold on one second. Oh my gosh.
This is what happens when we're all on the road 24/7.
No, I apologize. I'm actually in Buffalo, New York for a wedding. Yeah. And we got here late last night, 1 o'clock in the morning, flight delayed. And we walk into our hotel room and there's water all over the floor. There's some leak. So maintenance is coming to fix it. And I said, you can't come until 1 o'clock. And they're like, here now. Anyway.
I thought it was the wedding party. We got to have the wedding party on Money Talks.
Yeah, we'll put the wedding party on video. That's why I went with the virtual background so you wouldn't have to see the lovely hotel room. Yeah. But the thing was, he said to me, I'm going to spend the rest of my career in Bitcoin and blockchain infrastructure. And look, I was not running drugs on Silk Road. I was not a cryptography student. In 2013, I was just like, I've heard of it, but I don't get it. But as soon as he said infrastructure, my eyes lit up and I went back to 1996. We invested in Yahoo and Google and eBay. I mean, we put $500,000 of Notre Dame's money into Google, took out 200 million, like infrastructure of technological innovation. I get. So I wrote about it to clients first part of 2014 saying, hey, this is an interesting special situation. Price was $500. And I got hate, Bill. Like, we'll fire you. You're an idiot. Don't talk about this. Go do your job. You know, find his private equity, find his hedge funds. And that was a little disconcerting. And look, the price then, we were in a bear market, went to $186 from March of 14 to September. Like, oh, they were right. See? No. 8 weeks later, it was 1,000. Yeah. And no, they're not right. So to make a long story short, when my son graduated in 2015, I sent him, he wanted to live in San Francisco his whole life. I sent him out, talked to Coinbase, and it's like, I don't know, Dad, maybe it's gonna be a big deal, but I'm just gonna go to KPMG. It's safe. Like, you're gonna hate it, which he did. But when Coinbase went public, he's like, all right, fine, Dad, you're right, but you're not as smart as you think you are. Like, oh, do tell. I told you to go work at Coinbase. And he says, yeah, but you didn't lever up and put your all in Bitcoin. You little, yeah, that's true. So that's a long way of saying I was exposed early, took me a while to get it. But in 2016, I was all in. I mean, I went from spending no time on it to about 60% of my time. Today, I spend all my time. I run a venture capital fund focused on investing in the crypto ecosystem. And pretty exciting times.
Okay, so you've brought up a few things in your brief story there that I think are very relevant today. So given that there's a really good chance, and I'd love to hear your perspective on this, that we're either in or close to a recession. One, what's your feeling on that? And two,
no, we're in.
Yeah, we're in. Okay, then that part of the conversation is easy. So you and I both lived through the dot-com era, and I remember talking to kids who had never lived through a recession before then, who thought that stocks just always went up and to the right. And there's a lot of people here, like I said in the opening, under the age of 34, who've probably never been in a recession, other than, they probably graduated college maybe after the Lehman crash, or, at the beginning of COVID. Nobody really knew what to make of that. It's not a recession in a traditional sense. So do you see parallels between what's happening now and 99, 2000, 2001, or does this look, smell different to you?
Look, Bill, this is exactly a parallel to 2001. I mean, almost play by play. So you think about from 1995 to 2000, there were 10,000 companies formed. Early stage venture, back to there are not 10,000 good management teams. There just aren't. Yep. So 7,000 of those companies went to zero.
Yep.
Literally went to zero.
That's right.
3,000 of them either went public or got acquired. Some of them became really big companies, and that was great. But there weren't 10,000 good management teams. But everybody thought everything was going to go straight up to the moon. Mm-hmm. And in 2000, the market finally, in March 24th, 2000, finally someone said, wait, the emperor has no clothes, literally. And it started to go down. But if you remember back, is the Fed was like, no, we got your back. Remember, the Fed put in $500 billion back when $1 trillion was a really big number. Now it's just like, pocket change, $500 billion to ward off Y2K. Remember, the world was going to end on midnight of January 1st, 2000, because the computers didn't think that maybe they would roll over to a new millennium. But anyway, it did. The world didn't end, but they said, oh, we got your back. So the market actually rallied from kind of summertime through September, almost all the way back to even. And then people woke up and said, whoa, wait a second. And Cisco, just like they did the other day, said, well, I know we said we made a bunch of money the last few years, but we really didn't. So they restated all their past earnings. The market started to correct into 2001. And then in 2001, the fraud came out. I mean, like WorldCom, Enron, and the credit markets blew up. And you and Nat were talking about credit markets. That's the key, right? Bonds are down big, right? Traditional bonds down 10%, long bonds down 20%, although I think they're a pretty good buy here as defense. But high yield bonds down 13% and collapsing hard today. And so when the debt markets finally crack, that's the sign that things get ugly. And people forget 2000, markets are only down 6%, 2001 down 12%, 2002 was the big year, down 22%. Mm-hmm. And then we attacked Iraq and got the GDP going up, because that's how you fix GDP problems. You go to war. And that's always been the case. And so all this war talk now is not surprising, because we are, to your point, we are in recession. And arguably, if we don't do something in a hurry because of this zero COVID lockdown nonsense in China that has disrupted supply chains. I don't know if you've seen the picture of all the ships, stalled outside the ports in China.
I mean, you could walk off the coast of China without getting your feet wet. It's insane.
Bill, it's one of the most frightening things I've seen in my career. And so this is a perfect parallel to 2001. And I think, we're far from the bottom in the markets, and the Fed's going to have to pivot, and they're going to have to stop tightening, because they can't fix what they didn't create. See, here's this myth is that the Fed created the inflation by keeping rates low. No. They haven't created inflation. We don't have inflation. We don't have demand pull inflation. There's not excess demand and limited supply. There were some supply chain disruptions, both in the oil and gas markets and used car markets. 75% of the CPI increase is those two things. Oil prices likely aren't going to double. They're actually probably going to go down as demand falls off in a recession. And used car prices, as soon as the chip shortage is alleviated, those will go down too. So what this is monetary debauchement. Yep. When empires get overly indebted, you have four choices. You can pay the debt back. Problem is, you could tax everybody's wealth. Forget their income. You could tax all Americans, every cent of our wealth. You couldn't pay back the deficit.
Yep.
Right? I mean, the national debt. Couldn't pay it back. So you can't pay it back. You can restructure it, but someone will have to take the other side. No one's going to take the other side. You can default on it. Oh, no, because then the politicians get kicked out and they like to stay in power. So then you devalue it. 50%, 50, of all the dollars in the history of our republic, that's 256 years, were created in the last 2 years.
Yep.
What we're seeing is monetary devaluation, not inflation. Like housing prices where I live in North Carolina, up 40%. My house didn't grow. It didn't get more efficient. It didn't get better. It actually wore out a little bit. I put some money into it.
It doesn't give you more cash flow than it used to.
It didn't give me any more cash flow. Nothing got better about it. Yes. But the currency we devalue it in went down. And this is the thing I always love about Bitcoin, right? 1 Bitcoin equals 1 Bitcoin. But we don't talk about it in Bitcoin terms. We talk about it in dollar terms. In dollars, right? Since the beginning, 13 years ago, the dollar has depreciated massively. Bitcoin hasn't gotten better or worse. It just is. It just, TikTok, next block. It just is. The dollar has gotten worse and worse. Here's the thing. There's never been a bear market in Bitcoin, in Argentina, in Venezuela, in Turkey, in Russia, because their currencies are even more shitcoins than our shitcoin, right? The US dollar. And so when everybody says the dollar is so strong, I'm like, no, it's not. It's strong against, dictatorships, which we're approaching, but it's not strong against the renminbi. It's actually down against the renminbi the last 2 years. The DXY goes up because the euro, the yen, have you seen the yen lately? 130, 132. It's gotten crushed. So to say that the dollar is strong because the yen and the euro are super weak,
right?
It's oxymoronic.
That's like saying
That's a lot of stuff you
stage
didn't
1
ask.
cancer is strong because it's not stage 5 cancer. I mean, it just doesn't. Yeah,
It just doesn't make sense. Doesn't make sense.
So when you put a shorter term lens on this, though, I get this. I mean, we agree clearly on the structural issues. Do you see this as kind of short, painful V, or do you think we're in for a prolonged, deep, like nuclear winter here?
No, look, it is the question, and
Sure.
It's when you've been around a while. Although you don't look like you have, I look like I have. You look like you've been out surfing this morning, which I love. And I've
been up all night trying to figure out the answer to this question. So
yeah, well, no, but here's the thing: we are 1 or 2 policy errors away from depression.
Yeah.
And I don't use that term lightly. Everybody says, "Oh, Mark, you're so, such a downer." I'm like, no, I'm just a realist, right? Mm-hmm. An optimist thinks the winds will change. The pessimist thinks the winds will never stop. The realist just adjusts the sails. And I'm a realist. And we are 2 policy decisions away from a depression. In the 1930s, the government, the Federal Reserve and the Congress made 2 policy errors that turned a garden variety recession following the stock market crash into the Great Depression. One was they tried to tighten liquidity.
Right.
Okay. We just did that. So we've made one of the 2. And the second were these idiots called Smoot and Hawley, who put up tariffs. Oh, wait, we did that too. So we might have already made the 2 policy decisions that will lead to depression. And the real thing that has me nervous is the long-term 90-year cycle. It's been going on for millennia. The 90-year cycle, 1840, there was a depression in the United States. 1930s, depression, 2020s. So it doesn't have to happen. But when you look at the problem with food production, food distribution, all these, accidental fires and explosions at food processing plants, you look at the price of wheat, what just happened with the whole Ukraine thing, and you look at, baby formula shortages. We are on the edge of some really ugly stuff. And look at Ross stores today, right? That's low-end retail. Mm-hmm. Okay. And that's not a value judgment. I mean, it's just lower priced. I don't mean lower priced retail. Yeah. Down 26%. Target the other day, down 25%. Walmart. Here's the thing that most people don't understand about Walmart. Walmart makes 11% of their revenue every year in 12 hours. Okay. Every month at 12:01 midnight to 1 in the morning, 12 times, they get 11% of their revenue because people go shopping the last day of the month, 10, 11 o'clock, fill up their carts. At 12:01 midnight, their EBT card, their food stamp card replenishes, and they buy. And if they don't have enough for the rest of the month, that's it.
That's it, yeah.
Those people are living not even paycheck to paycheck. They're living moment to moment. And the fact that gasoline is doubled, maybe even tripled in some places, depending on where you are. Yep. Food prices are going up. This is really bad. And when you throw on top of it, this China nonsense, which I will argue is intentional. I believe it's absolutely intentional to cause this type of pain, because what pain does is it causes people to look around and look for heroes. Mm-hmm. And what did Russia do when we put sanctions on them? They turned to China. Now they have this big long-term oil and gas, which is priced not in dollars, which has been the U.S. hegemony for, since the 1940s. They're pricing in renminbi and ruble. And the more times people look and say, oh, China's our hero. Look what they did in Greece. They went in and bought up all the ports and all this, major shipping route stuff. Look what they've done all over Africa. or they lent them money when they couldn't pay it back. They're like, well, we'll just take that port, or we'll take that, rare earth mineral, or we'll take that oil and gas reserve. So they are very strategic. They think very long-term. And I will argue that their plan is to be the superpower by 2050. Not tomorrow, not next year, but by 2050. And so if we continue to make bad decisions at the policy level, like taking liquidity out of a faltering economy, we're going to shoot ourselves in the head.
So it appears that inflation is going to come down, or is peaked, because the bond markets and oil markets did what the Fed wouldn't do earlier. Okay, and it probably would happen anyway, based on what you're saying. And so if the Fed basically says in the next meeting, okay, here's a 25-point hike, and we're going to do nothing after that except wait and see, which is kind of their way of saying, okay, we're probably in a recession and we don't want to tell you.
Yep.
Do you think it becomes a V and we recover quickly because the markets realize that, okay, they kind of get it? Or do you think it's still, because of all the piled on mistakes, another X years or X months of pain?
See, I think, again, that's the really right question to ask. And I think economically, very little chance of a V, right? I think economically, there's so much damage that's been done by the tariffs from a couple of years ago. Stupid. I mean, just terrible idea. From the supply chain deglobalization movement, just dumb, right? If you go to just-in-time inventory, you can't suddenly decide, I don't want to buy from you anymore.
Right.
Take computer chips, right? Silicon wafers turned into chips. There's only 4 places in the whole world that produce wafers. We don't have any of that production in the United States. It would take 15 years, I don't know exactly how long, to get a really high-functioning fab here in the US. So to piss off those people that supply those really critical things in a digital world, so I think very little chance we have a V economic growth. Is it possible that animal spirits in the market could come back, and that so many people get short here in the short term, which is definitely happening? Look, every day the market goes down. And you made a really interesting point in the opening that most people don't realize. The biggest up days in markets do not happen in bull markets. Right. Bull markets go up a little bit every day and go down sharply on bad news or perceived bad news. So the biggest down days don't happen in bear markets, they happen in bull markets. And conversely, a bear market is a market that goes down most days, but then spikes sharply on good news or perceived good news. Like, things weren't as bad as we thought. They're still bad, but they weren't as bad as we thought. So clearly, if the Fed does the Powell pivot, which I fully expect, for a short period of time, the market would definitely do a V. We might see a 10, 15% type of move. Crypto might follow. The problem for crypto right now relative to markets is everybody says, it's trading like a speculative asset. Yes, because the free float of crypto, particularly Bitcoin, is so small.
So small, right?
65% of Bitcoins haven't traded in the past 12 months. Right. They haven't moved. And the hodlers don't care about short-term price. They care about long-term value preservation.
The dips are great because they just add to their stash, right? So
yeah. And so the problem is the short-term holders, the people who bought only because the price was rising. And I'm going to back up, 18 months. Again, huge policy error. So you make the dumb decision to lock down, right? Respiratory virus, we're going to lock everything down and stall the world. Dumb. Okay, fine. But you did that. But then you made a compounding of the error by giving people free money. Right? You literally sent people free money. So you lock them in their apartment. You say you can't gamble. You can't go to Vegas. There's no sports. But here's some money for free. So what do? They started gambling in the markets. Meme stocks, crypto. And then what happens? We'll loan you some more money on top of that money so you can lever up and gamble more. And look, there's 4 types of participants in markets. There's investors, investors are good, right? You try to buy what's cheap, you hold it for a long time, you sell it when it gets expensive, you keep investing. That's good for market. Traders, no problem with traders. They try to scalp a little on the ups, scalp a little on the downs. Professional, fine. Then there's speculators. Speculators buy things because the price is going up. They don't have any knowledge. They don't have any interest. They just, hey, it's going up. We'll buy it. But then there's gamblers. And gamblers are the worst because they're using other people's money, borrowed money, or free money. They don't care if they lose it because it doesn't have any meaning to them. They didn't earn the money. And here's the worst thing that can happen. If you make that first gamble and you win, it's like going to Vegas and you hit your first, hand in blackjack. You're like, oh, I'm good at this. No, that's luck. If you play long enough, you'll give all that money back and more because the house wins. That's how it works. And it doesn't mean you can't win, but you got to stop when you're ahead. Because if you just keep playing, you will lose. And so I think the same thing here is, I think many of the degenerate gamblers have been flushed out. I think that was the first leg down, the super levered. I tell this story and I won't name names, but someone close to me called me and said, they stole my Bitcoin. Like, what are you talking about? He says, well, I went to Bitfinex and said, just stop. So you went and you put 100 to 1 leverage on an 80 vol asset and the price went down and you didn't make the margin call and they seized the collateral. No, they stole my Bitcoin. I'm like, no, you lost your Bitcoin because you're an idiot. All right. And doing that is not theft. Now, someone said, well, but those firms, they entice people in promises of riches, get them to over lever, and they are trying to steal. I'm like, oh, I didn't think about that. So maybe that's true. Maybe it's not. But no one stole the Bitcoin per se. They didn't go in and hack it and steal it. You shouldn't have had the leverage. But we have leverage in stocks. We have leverage in bonds. We have leverage in crypto. Now, a lot of that leverage has come out, but it's still higher than it was in 2008, believe it or not.
Wow. Really?
Crazy. It's crazy. And so when people say, are we done? Should we buy the dip? I'm like, no, you should sell the rip. Anytime things rip here, sell into it, get more cash, get more liquidity, and be patient because it's a long-winded way of saying, I think the economy does an L, ultimately a U, because we will survive, right? We will thrive in the future. The future is bright. And everybody says, oh, you're you're so negative. I'm like, well, I'm not negative. Again, I'm just a realist. In the short run, it's going to be really tough. In the long run, I'm the most excited I've ever been in my life.
So let's segue that into your strategy, right? So everything you're saying makes sense. I'm seeing the comments, people get it. How does that translate into either, maybe you want to talk about your personal investment strategy?
Yeah, no. So two things. So in Morgan Creek Capital, so, I don't have a Morgan Creek digital background, I should, but Morgan Creek Capital, we do hedged with a capital D funds, right? We do hedge funds. And I like being hedged with a D, so I can buffer the downside. And, our fund's down 6 or 7% this year, but that's better than being down 26%.
Yeah, for sure.
Right? So, Roy Neuberger, founder of Neuberger and Berman, one of my heroes, went in the office every day to his 94, managed his own money to his 101, finally passed 107. That's a good life.
Wow.
Said 3 rules to managing money. Rule number 1, don't lose money. Rule number 2, don't lose money. Rule number 3, don't forget the first 2 rules. So on the capital side, we do hedged equity. We do venture capital, traditional venture capital, early stage startups. And in bear markets and economic recessions, the best companies are started because people get laid off. They need to do something. They say, I'm going to go start a company because I got a good idea. I'll give you a great example. So back in 2001, there was this guy got laid off. And long story short, he had this project at Bell Labs called dense wave multiplexing. Okay. Dense wave multiplexing. No, actually it wasn't. It was the 93 recession. And he got laid off. He said, can I take the project with me? They're like, we don't know what dense wave multiplexing is. Knock yourself out. No one would back him. No venture capitalists back him. He got his retired 3rd grade teacher from Philadelphia to give him $300K, which turned into $300 million because that became Sienna, which is you shine light through a prism and break it into multiple colors. And each color takes the same amount of data through a fiber optic cable. Absolute genius. Okay. In 2001, we invested in this little startup called JetBlue Airlines. So you can't do a startup airline, that'll fail. it did really, really well in the depths of recession. So early stage venture, awesome right now. Hedge funds, really like it. And then the last thing we do is China growth equity. No one wants to talk about that. So let's not talk about that. On the other side, Morgan Creek Digital, which I started back in 2018, we run venture capital funds. 70% of the money goes into equity in businesses around the digital asset ecosystem. Today, we do anything in exchanges, Web3, gaming, play to earn, tools, software, anything that helps the ecosystem grow. And again, never before, and you and I have seen this, in 2000, the smartest people we knew were coming out of every industry into the internet. And everybody said they were idiots and everybody said they were stupid. And they created some of the greatest companies of all time. Now, the migration of talent. I spent yesterday up in DC with a room full of people who have left other worlds to come into this world. Unbelievable. Couple CIA people, you probably knew them. And I mean, just really amazing people coming into this space. It's like nothing I've ever seen. So I'm more excited about the future and what you can build in venture capital. Now, were valuations too high 6 months ago? Absolutely. Did we and others pay too much for some things? Sure. But going forward, we're going to pay the right valuations for the right types of companies. 30% of what we do is in tokens. Now, in our first fund in 2018, we bought a lot of Bitcoin and Ethereum and Solana, and that did great. In our second fund, we kind of made a mistake. We went only Bitcoin, missed some of the DeFi stuff, which we should have done. In this fund, we haven't done very much. We kind of said, look, this looks like a falling knife. My thing about falling knives, Bill, every time I've tried to catch one, I cut off a finger. I like my fingers. So I just let the knife hit the ground, bounce around a little bit. If I miss the bottom, I don't really care because I can grab the handle and not hurt myself. So I'm willing to let it kind of roll up the other side a little bit first. So I said, what we do is we raise funds. We're on our third fund now. We are about to launch an opportunity fund, which will be more liquid because I think the decimation in the liquid market is going to get worse, like seriously worse. And then there are going to be some buys of a generation.
Very interesting. So I know this is pure speculation. Do you think the knife is already bouncing around, or do you think it's still falling? Or
I think it's fallen. I think if I had to guess, in the traditional markets and equities and credit, I think credit markets are halfway down. I think credit markets are going to fall like hard, like bankruptcies and defaults and bad. Not everybody, but the ones that shouldn't have gotten funding before, they're going to crash. I think equity markets, the worst, have already fallen a lot, right? Peloton, Zoom. I mean, Zoom is a great company. It's a great company. We're using it right now. It's a great company, but the stock was way too high at 100 times revenues. 100 times earnings is stupid. 100 times revenues is insane. And so, Peloton might not survive. Maybe it has to go private, probably should go private. Pinterest probably has to go private. Carvana, definitely going to go bankrupt. I mean, they actually signed a financing deal 3 weeks ago with bankruptcy clauses in it that Apollo gets to own the company. I'm like, why would anybody own that stock now when Leon, who is pretty good at buying stuff on the cheap, got all this great stuff? So I think over-levered companies that don't make money. Oh, here's the thing. That you remember this article in the Wall Street Journal, the return of this concept called profits, right? I mean, in 2002, it's like, oh, maybe we should try to make money. You can't just get eyeballs and TAM and all that stuff. So I think the bad stuff has fallen, but here's the problem. The difference between down 90 and down 95 is you've lost half your money. So don't think just because it's down 90, it can't go down more, it can. The stuff that still has a long way to go is the big stuff. You saw what happened to Cisco. You saw what happened to Netflix. You saw what happened to Facebook. I think there's a lot more. Saw what happened to Amazon. I think there's a lot more of that because those valuations are still too high. Apple sells at 23 times earnings for a company whose earnings aren't growing. But Mark, the earnings per share are rising. Well, no, they are, but only because they're buying back stock. So they're doing financial engineering. Their net earnings is the same as 5 years ago. That's not growth. So why would you pay a growth stock multiple for a company that's not growing? It's a great company. I love my iPhone. It's awesome. But I wouldn't buy that stock at 23 times. nor would I have bought it at 35 times or 40 times. So that's a long-winded way of saying, I think the public markets have got a ways to go down. And I think the liquidations will accelerate. And that's when you see these fast drops. That's people getting margin called. And that's what's going to hurt crypto. Because in a margin call, you don't get to sell what you want to sell. You sell what you have to sell.
Yep.
And that's why gold, bonds, crypto back in 2020 went down so much. People like, why are those going down? They're not getting impacted. Well, no.
People needed the cash.
If you own a liquid asset and you get a margin call and your stock went down 50%, well, you can't sell that to cover the margin call. So you got to sell something that didn't go down. And I think that's where we are. And I do think, unfortunately, still, particularly in some of the alternative tokens, they're just over-levered, right? People didn't learn the lesson that the problem is you can't learn it from other people, right? You have to feel the pain in your gut of the loss. And leverage can never make a bad investment good.
Yep.
Can never turn a company around and make it have cash flow, can never make a bad investment good. But it can, and unfortunately sometimes does, make a good investment bad, because it forces you to sell when the price is below the value. And this is, I stole this from John Burbank, and you know John from San Francisco. And John has a great line: price is a liar, right? The price of anything, Apple stock, Amazon, Bitcoin, Ethereum, has nothing to do with value. Value is determinate, right? We can look at the size of a network if it's a crypto. We can look at cash flow if it's a business. The value we can determine, but the price is set by two people that decide to exchange a very small amount. If you and I wanted to trade 100 shares of Amazon, that price of $2,100 or whatever it is today, that's the price. But if I had 1 million shares, that is not the price, because you're not going to pay that same price for 1 million shares. You might pay for 100 shares. So same is true of overvaluation and undervaluation. Humans do two things really well. We buy what we wish we would have bought, and we're spectacular at it, right? We constantly chase the hot dot and buy things after they've already gone up. And then we sell what we're about to need. Like, investing is the only business I'm aware of when things go on sale, everyone runs out of the store. Like, put wedding dresses on sale. People don't run out of the store, they run into the store, right? When you put stocks or crypto on sale, people run out of the store, and the cheaper the price, the further they run. And so the challenge is that we have to remember that greed pushes prices way above fair value. Let's go back to 2018. So 2018, November, the value based on the Metcalfe's law, supply demand model, said that value of the network was about 10,000. We got to 10,000 within like 5 days of what the model said. And then we went right to 20,000. Everybody's like, oh, we're going to the moon. We're going to 100,000. I'm like, no, we're not. We're going down. And they introduced futures December 18th, 2018. And from there, we went down, 84%. Why? Well, one, when you create futures, it's bad for things, because then you can create paper assets instead of physical assets. Paper assets can be shorted by banks. Look at gold. Gold has been flat for years because JP Morgan spoofs the price. They pay $1 billion fine. Everybody looks the other way. I'm like, what? They're doing illegal stuff. And like, well, but we made 20 billion. We pay 1 billion, just the cost of doing business. Okay. So that's what's happening in Bitcoin right now. It's being pushed down by people shorting the futures. That's why they didn't approve the spot ETF. And so fear and greed drive those movements above. We had greed in 2018. We had greed last November. Fair value today, let's take the Bitcoin network. Fair value, 32, 33, somewhere around there. So now we're below fair value. The problem is we can go way below fair value. I'm not saying we will, but you can, because that's when fear sets in. Now, the reason I'm not as concerned of a giant fall, actually, I retweeted a great tweet thread on this from Jogi, J-O-G, I can't remember his name. Anyway, so at Jogi something. And it's this great thing. And basically, Bitcoin is cheap relative to its history. Stocks, NASDAQ and S&P, are still expensive relative to their history. Mm-hmm. the S&P would still have to go down another 30+% to get to fair value.
Right.
We're arguably below fair value in Bitcoin. Now, that doesn't mean we can't go lower.
Right.
But I think stocks have much further to fall because I think they need to get to fair value and go below fair value. Whereas, truth be told, I'm still a little nibbler here. I don't believe in buying any asset all at once. I think you should buy some. And then if it goes on sale, buy a little more. If it goes on sale, buy a little more. If it goes on sale, buy a little more. And just keep accumulating. And for me, particularly with Bitcoin, and I'll make some people happy and some people angry, I believe in the base. Bitcoin, Avalanche, Solana, Ethereum. Now, why do I believe in that? Well, I believe in the stack. So in the internet, we have TCP/IP, FTP, HTTP, SMTP, www. In the new stack, I think it's Bitcoin, Filecoin maybe for FTP. I think Ethereum is kind of like www. And then there's a bunch of things fighting to be a HTTP and SMTP. And is that Solana? Is it Cosmos? Is it Polkadot? Is it Avalanche? Is it something else that hasn't been created yet? Is it Polygon? I don't really know yet. And I'm not super techie. I have other partners that do that. I'm the financial services guy. But I do think that owning that base layer is really important. And to me, Bitcoin will be one of, if not the base layer.
Yep. Okay. So I tend to agree with you on that. So just to kind of wrap this up, I mean, this has been a masterclass, and the comments here are very appreciative, by the way. So your comments about the knives, your comments about crypto, it all makes sense. Bitcoin has never traded, to my knowledge, 3 standard deviations below its average price, and it's actually approaching that now.
Yep.
If I'm reading the charts right, and that means that in order for Bitcoin to even stay above 3 standard deviations, it would probably have to be trading at like 80 to 90,000 by the end of next year.
Yep.
Which would still mean it's 2 to 3 standard deviations below.
Yep.
It's kind of
it's long-term trend,
which is incredible, right? And that's obviously not true for any of the indexes.
Oh no, not even close.
So that's very encouraging to me. But like you said, that doesn't mean it can't go down. It just means that long term, it should basically.
Well, but again, you and I have lived through this, and no matter how far Cisco fell, or Microsoft, or Intel, you knew that those companies that built Web 1 were going to do well, right? You knew they were going to recover. You knew the web wasn't going away. And you knew that the companies that built on top of those for Web 2 would be an even better opportunity. And again, this is why I get so excited, is if you think about a parabolic curve, and parabolic growth or exponential growth is the thing that the average person just doesn't understand. If I say, what's 2 times 2? Everyone listening will say 4. Okay, got it. If I say, what's 21 times 17? I'll wait. That's the limit of human intelligence. The average person can't do that without a calculator. Mm-hmm. And so if I say, how are you at nonlinear regression? Ooh, not very good. So how about exponential growth, right? If I take 20 linear steps, I get to the other side of my hotel room. If I take 20 exponential steps,
you'll be on the moon.
I get to high five you twice because I go around the world twice.
Right.
20 linear steps. If I take 30 exponential steps. If I take 30 exponential folds of a paper, right? I'm at the atmosphere. 50 is the sun, 100 is the known universe. Exponential growth is what it's all about. And so you think about an exponential curve. Web 1, okay, which was amazing. Intel, Microsoft, the area under the curve, parallel to the x-axis, was big. Multi-$100 billion, even $1 trillion companies. Web 2, knee of the curve, okay, Alibaba, Netflix, Apple, okay, more wealth, first truly $1 trillion companies. Now we're about to go parabolic, okay, that's Web 3. The wealth creation opportunity for Web 3 is the biggest we'll ever see in our lifetimes, even if we're here a long time.
Yep.
And it's because we're building on better technology. You remember this, right? Web 1 was building on dog meat. Client server technology, dial-up modems. I mean, it was horrible. Netflix almost went bankrupt twice because you had to wait 4 days to download a feature film. No one's going to wait 4 days. No one's going to wait 4 hours or 4 minutes. They want instant. So, but we needed broadband. We needed GPS tracking. Pets.com, the epitome of the zero in the internet age, is Chewy.com, $20 billion company. Same company. They just needed the infrastructure to get in place. And so we're at that same inflection point where we're not building on dog meat. We're building on the internet. We're building on the mobile net. And now the trust net, which is where everything of value, every stock, every bond, every currency, every commodity, every piece of real estate, every private business, everything will be digitized, will trade over blockchains. And all a blockchain is, once you see this, you can't unsee it. All a blockchain is a ledger, digitally encrypted, and every line is a token. And all that line is a title to a stock, a bond, a currency, a commodity, a piece of business, whatever, a piece of art, a JPEG, doesn't matter. But everything will be these tokens, these entries. And that's why I don't like the term NFT, non-fungible token. That is what it is. But people think that's a JPEG. No, non-fungible token.
Right. Yeah.
Everything. Your marriage license, your driver's license, your title to your house, everything will be a token. I like digital property rights as a better term.
Yep. Agreed.
But ultimately, the businesses that get built now, and why you started this call saying how excited you were to come back from permissionless and all these Web3 people who are leaving their real jobs. And I went to a Blockworks event right before COVID. I'll leave you with this. Back at the end of 2019, literally right before the lockdown. And I gave my usual talk about how excited I was and how this migration of talent. And this young guy comes up to me afterwards, hey, would you call my mom? I'm like, what? He's like, my mom thinks I'm an idiot. I left this big law firm. I'm going to work for this crypto company. He's like, yes, let's go call your mom. So we called his mom. He said, no, he's actually really smart and he's doing really well. And that's where we are today. We have these.
And she did say, well, wait a minute, you're both idiots.
No. I mean, she probably did say that after she hung up. And why are you talking to my son? But look, we are at an amazing inflection point. We have to cross the chasm, right? The chasm of profligate spending, bad policy. I will argue the dictator playbook, which, the Fed is designed, right? The Fed is not federal and has no reserves. It isn't owned by the government. It's owned by the banks. It's designed to take our wealth through inflation. Inflation is not good for you. It's not good for me. It's not good for you. It's not good for anybody. It makes the elites rich. It's why we have the greatest wealth and income inequality in the history of mankind. Bitcoin frees us from that. It is a deflationary asset, not an inflationary asset. It allows us to do all the other things on all the other chains and all the other businesses that will be Web3, that will be the metaverse. And it's all going to happen. And that's the cool part.
Yep. So this has been an absolute masterclass. I love this conversation. I'm looking at the real-time chat here. It's been awesome. Besides being just a super interesting guy, fascinating, you're also the adult in the room, and we really appreciate getting your perspective on all of this. Where can people follow you online?
So on Twitter, I'm at Mark Yusko, so MarkYusko. I actually have a LinkedIn, but I actually don't use it because I'm just bad at media. So good. No, but my DMs are actually open on Twitter, and I actually do answer them. As long as people are respectful. I block early and often. I will say that. I have no time for trolls.
I have no problem with that.
And then we're at Morgan Creek CAP.com, website for the company. And I've done a lot of podcasts. I do a thing every week, except this week we didn't because Mike got sick at permissionless. Or maybe he was out too late last night. Maybe that was the real thing. I'm just busting on you, Mike. But there's a lot of places I'm out there. But look, I really I love our relationship, and I hope we get to do this again sooner than later. And congrats to everything Abra has built. You are a stalwart in our industry, and really appreciate spending time with you today.
It's awesome. Well, Mark Yusko, Morgan Creek, we really appreciate you, and thank you for coming on Money Talks. It's been awesome.
Thanks, Bill.
All right. Take care.
See ya.
All right, gang. Thanks again to Mark. Like I said, that was an absolute masterclass. We had scheduled 25 minutes, but I don't know how you feel. I was so into it. I just wanted to let him go. I mean, it was just awesome. And it doesn't happen very often here. We really do try to keep to the schedule, but when you get somebody who's on an absolute tear, we just let them go, and hopefully you appreciate that. And we are going to do the AMA, the AAA, Ask Abra Anything. Others had to run off to other things, and our head of product is out today, so I'm going to do it myself. You don't have to stick around if you don't have any questions. If you want to stick around, you're more than welcome to. In the meantime, I'm going to take just a quick 1 minute here. We've created a whole bunch of ways for you to add money to your Abra account. No matter which way you choose, it's safe, simple, and secure to fund your account. Take a quick look at this, and then we'll do our Ask Abra Anything.
Funding your Abra account is easy. Just open the app, then tap Add Money. To buy with your Visa or MasterCard, tap the app. Click Bitcoin through Simplex. Open in your web browser. Enter the amount, then paste your Abra wallet address and tap Continue. To transfer money from your bank account, tap on ACH Transfer, add a new bank account, Continue. Then select your bank. Enter your username and password. Confirm your identity with a code. Select account, enter an amount, and confirm. For a wire transfer, tap Bank Wire Transfer. Then tap Wire Instructions. Log on to your bank's online banking page, then initiate a wire transfer. Follow the instructions on the Abra app to input your account, then send your wire. Transferring crypto is simple. Tap Deposit Cryptocurrency, then select the coin you're transferring. The Abra app gives you the receive address to send your funds to. Funding is easy with Abra.
All right, welcome back. Let's get into this. I think it's just me today, so I'll basically take your questions. We've got support on the live chat, so hopefully you've all been taking advantage of that. And of course, we have real-time support in the app itself. And so let me get into this. A whole bunch of questions here. Obviously, people asking about CPERCs and trading there. I know that the live testing has begun, and they're making good progress on that. And so kudos there. I know it's been tough to get this thing out because it's such a huge change for Abra, but hopefully we'll have more good news on that in the coming days. Nothing more to say except it looks like we are in final kind of testing and hope to get it to you soon. I also know we're going to have a couple of big announcements regarding CPERCs in the coming days. I'm guessing next week. So the team is working on that diligently, and we will get back to you. I'm seeing a lot of really positive comments on YouTube, Facebook, and Twitter for Mark. And that's great. I really respect Mark a lot. And look, it's tough to talk about reality when you don't like reality, and that's why we want to bring it to you straight and have folks on who not only can be excited about the future, but can give us a healthy dose of reality. And Mark's masterclass was certainly that. So let's see. I talked about rates last week. I talked about Luna. So I'm not going to say much more about Luna. We don't have exposure to Anchor or Luna at Abra. Somebody was asking me about that. So just to clarify, but if you go back and watch last week's show, you'll see a lot more detail on what happened with Luna. We've covered that extensively, but it doesn't impact any of the yield that you're earning on Abra today. So if you have any lingering questions on that and you missed last week's AAA, I will assure you that that is the case. Let's see, a few other questions here. Thank you to Mark. Lots of, wow. So this is probably some of the best comments I've seen on a guest in quite a while. So also, Natalie was on with Stu Varney yesterday on I forget which channel that is. I don't remember if it's Fox, but anyway, she did great, and I'm seeing some comments for Natalie. Natalie's got a lot of fans here, and she's getting better and better. I mean, she She has a lot of conviction. She sticks to it. She understands it, and we're just thrilled that she's with us at Abra. I've got a question here on the SEC and the Grayscale ETF, and my understanding is that that decision is pending. I have not seen anything on it yet, and I know that they announced a launch of their ETF in Europe, which is great. It's a smaller market than the U.S., but it really shows that that this can be done. It can work, and hopefully gives the U.S. SEC a playbook for moving to approval. And the Grayscale has really gone after the SEC hard on this, and I have a feeling that if they don't approve, this is going to end up in court, which I actually think ultimately is a good thing for crypto, because I can't see the SEC winning that fight. I think we're at a point now where they kind of have no choice but to capitulate. And my gut tells me they are gearing up to do that. Okay. All right. So let's see. So Bitcoin is trading down today. We're at about 29K. Ethereum down, still on sale at 1925 and change. And like I said, when in doubt, zoom out. But clearly we've got some short-term pain in front of us. The most interesting thing for me from a long-term price perspective is that Bitcoin is at kind of 2 standard deviations below the mean the average in price. And I don't think it's ever traded at 3 standard deviations below. And in order to even stay at 2.5 standard deviations below, the price would have to go up to like 70 to 80,000, if I'm reading the charts right, by like sometime next year. So, or mid next year. So that is super interesting. And that tells me that Bitcoin's kind of fair market price is not being priced in correctly right now for Bitcoin. And if the amount of Bitcoin that I'm seeing being locked up is tremendous. Anyway, alts are down, obviously 80% from the highs. In 2017, the alts were down 95%. Okay. And, if we're going to see another 2017, that means that the altcoins could fall 70% from here. Now, I'm not saying that's going to happen. And I would probably bet against that happening, but it's certainly not outside the realm of possibility. So if you're going to pick bottoms, go in slowly. That's my recommendation there. And at the same time, I think Bitcoin and Ethereum have tremendous upside potential. Tesla announced, by the way, in the last couple of hours, I was just handed this, that they're going to resume accepting Bitcoin as payment. And they're referencing a Bitcoin Mining Council's report showing 58% renewable energy in the energy mix used for mining Bitcoin. So I guess Elon Musk stuck to his promise and said that if we could show that Bitcoin mining was green, that he would accept Bitcoin again as payments. I don't think that will move the price, just like I don't think it moved the price when he started to not accept it for payment, but it's always good to see somebody doing what they say they're going to do. I'll give you a couple of comments from Permissionless. Absolutely fascinating conference. Obviously, a lot of talk about Luna, but a lot of talk about building. And, people have a really healthy perspective on what's going on right now. And these downturns, I know you hear it over and over, but they really are a good time to just hunker down and build. Anyway, and a lot of comments on the difference between L1 and L2. Nick Carter, I had some fantastic comments. We got to get Nick back on again. He's great. He talked about how the industry's never seen a recession. And then the reality is that, we are fully indexed to what's happening in the outside world. So I agree with Nick on that. We don't live inside the matrix in crypto, at least not yet. So we need a bit more of a reality dose there. Okay. So really great stuff. So many interesting themes. There was a fantastic NFT studio, I don't know what you call gallery, I guess, or exhibit, which I really loved. I got to spend time with Trippy, who's pretty cool. If you're watching, I said he's going to watch. I don't know if he is, but it was great meeting you. And yeah, so some really interesting. So NFTs are, I think, are here to stay, and that crowd was just super bullish, and I probably met more developers working in the NFT space and DeFi space than any other aspect of crypto. So that was really fun. All right, we're going to stop there. We're going on 70 minutes, and so thank you everyone for the awesome questions as always. I'm looking at the live feed here, and yeah, so I will talk next week about the SEC and Ripple XRP. I'll have some more to say about that. I had a chance to catch up with the CEO of Ripple at Permissionless. We talked for a few minutes, and his thoughts. I don't know if you saw, there was also an interesting First Circuit ruling against the government that is overstepping in terms of how it does enforcement via the SEC as unconstitutional. I don't think it will stand long term, but the fact that there was a 50-page report finding this is truly astounding. And we'll talk about it more next week once some of the dust settles and we can comment reasonably on it. But very interesting news indeed. Okay, with that, I will wish you all a wonderful weekend, and we will see you next week on Money Talks. Oh, by the way, and we have an amazing guest coming up next week. Rick Edelman is going to be joining us. Rick is one of the best investors of all time. Ran the largest registered investment advisor in the world. Okay, so we will see you next week on Money Talks. Take care, everyone.